Now, if you just own a low-cost index fund that mirrors the S&P 500, as I recommend you doing with most of your retirement money, then you still got a 9% gain here. But suppose you own Cramer fave Idexx Laboratories, IDXX for you home gamers, the leading purveyor of diagnostic systems for pets. Well, you'd now be up 40% just for 2017 after a monster 60% gain last year. 40% on top of the 60%. So what's driving this magnificent move? A rally that was eminently gettable because I've been recommending this stock pretty much every step of the way. And more importantly, can Idexx continue to levitate here? Is this the place that you should be buying? From a big picture perspective, Idexx is another story that's all about the humanization of pets thesis. As I've told you before, these days, more and more people are buying cats and dogs, and at least in America, they're increasingly being treated less like animals, and more like members of the family. In practice, that means we're willing to spend fortunes to keep our pets, like Bug and Everest, my two rescue dogs, healthy. We buy them the best food. We get them the best health care. According to the latest American Pet Products Association survey, 68% of U.S. households now own a pet, up from 56% roughly 30 years ago. And the number of households has also increased pretty dramatically, which adds up to a lot more animals. But while quantity has a quality all to its own, to misquote the not-so-great Joseph Stalin, what really matters here is not so much the sheer number of pets, it's the fact that Americans are willing to spend a fortune to keep them alive and well. In 2001, we spent $28.5 billion on pets in this country. By 2016, that number had more than doubled, coming in somewhere between $62 billion and $66 billion. Plus, we collectively shelled out nearly $16 billion for veterinary care last year. And that is where Idexx makes its money. So what exactly do these guys do specifically? Okay, Idexx makes veterinary testing and diagnostic equipment, including all sorts of instruments, analyzers, and test kits that you see when you take your cat or dog to the vet. The bulk of their business relates to companion animals. The company also has a smaller livestock-oriented division, as well as providing services for outside reference laboratories, testing water quality, and even selling software that helps veterinarians run their practices better. When you go to the vet, and they can do the test right there, either for blood or urine or dog doo-doo, I waffled over how to call it, but I settled on that. That's Idexx. When your pet gets an X-ray, they're probably the ones making the imaging system. And when your vet needs to send samples out to get to an outside reference lab to get test results, Idexx too. Now, I don't want it to make it sound like Idexx just happens to be in the right niche at the right time, though. This is a company that's been innovating almost constantly for the last 20 years, coming up with better and better vet systems. Over the last 5 years, Idexx has generated 80% of the entire industry's investment on new product innovation within the animal diagnostic category. For example, the company came out with a test that transformed the way veterinarians diagnose and treat kidney disease in both cats and dogs, allowing them to catch it months or even years earlier than before. Nearly 3 years ago, the company also came out with a chemistry analyzer that lets veterinarians do reference lab quality tests in-house. All this investment in innovation has given Idexx a huge installed base of machines in labs and veterinary offices across the country. And whenever these machines are used, vets need to buy additional, what's known as consumables. That's why roughly 87% of Idexx's revenues are now recurring in nature. It's a razor blade business model, and it works fabulously. I always tell you, that's the ultimate. That's Intuitive Surgical, and it's also Gillette. And look, it's not just the U.S. Now, granted, we are the biggest animal lovers in the world, but the rest of the world has twice as many pets as we do. The thing is, other countries have been slower to adopt this humanization of pets thesis that I've been propounding, because even though they have twice as many pets, they only spend half of what Americans do on diagnostics. Many countries are 20 years behind in terms of adopting these machines. However, Idexx sees that as an opportunity. Right now, Idexx gets only 38% of its sales from overseas, but if the company's right, then that figure could grow by leaps and bounds. What about the numbers here? All right, when Idexx last reported at the end of April, the company delivered a true blowout, top and bottom line beat. Management also raising its full-year sales and earnings guidance more than probably about everything other than about 10% of the S&P. That's how high this was in terms of the guide. On the conference call, they noted tremendous strength in their international division. Right now, the company has 11,000 of its Catalyst analyzers installed overseas. But Idexx believes they can grow their base to 5 times that number. Even better, The company recently finished shifting to a fully direct sales force, and this transition has been so successful, they announced a major increase in their field presence, adding 3 new regions, 45 new sales reps. They're rolling out some major new tests, one by the end of the year, one by the middle of next year. Oh, and Idexx just finished rolling out a more advanced version of its veterinary urine analysis. Remember, they call that liquid gold. They said it on our show, so it's okay. It takes a machine learning approach, incorporating all the data the company has collected from its clients to do a better job of spotting signs of disease or parasites. Okay, there's just one issue with Idexx, you probably guessed it. The stock's up more than 80% over the last 12 months. And after that kind of run, some investors start to freak out about the valuation, like we saw today in NVIDIA and some of the other big cap tech names. That's why earlier this month, analysts at Aegis initiated coverage on Idexx with an outright sell. And hey, all right, who can blame him? The stock's selling at 47 times next year's earnings estimates. But wait a second, my view, when you look at the company's closest competitor, which is a company called Idexx, which makes portable blood analyzers for both animals and humans, that's trading at 36 times earnings, even though Idexx has struggled of late. Idexx isn't struggling at all in their business. It continues to surge. Idexx hasn't rolled out a major new analyzer in years. Idexx can't stop innovating. Idexx is expected to see its earnings shrink by 4% this year. Idexx will likely post 25% earnings growth, a major acceleration from last year's 16%. In the end, with Idexx, you're paying for the best house in a hot neighborhood, and that's always going to be expensive. If you don't already own it, you know what, though? You can wait for a pullback, because look at what's happening today with these high-growth techs. They're giving you a chance. But given Idexx's track record, you might be waiting for a very long time, or you only have a small window of opportunity. Here's the bottom line. When you've got a huge long-term theme you believe in, you need to stick with it. Idexx is executing. Its business is on fire. But I do believe that as the rotation out of higher growth and to banks, drugs, oils, and retailers continues, you'll likely get a chance to buy this stock at a lower price. So wait for your pitch. There's no hurry. It's a long-term thesis, not a trade. Stick with Cramer.